Alrighty, folks. We are back. We are back in action here. Another trading day. Welcome to Sydney Tokyo overlap with SPDas, Elliot Wave Theory Trader. Another perspective on the markets. We're super excited to bring this live session to you. Yesterday, the day before, since January 1st, and of course since 2016. We're also trading with IT Trader at 8 a.m. EST, Monday through Friday, covering smart money institutional trading and analysis. Our unified market narrative AI is compiling our live session data and narratives into one unified market narrative, also according to fundamentals from multiple data sources, and of course, other traders on our platform. Super excited about this. Also super excited about our time series analysis AI, which is very advanced and based on multiple trading styles, also based on our trade idea history, which we have been accumulating since 2016 and are also accumulating every day. Lots of updates, lots of cool things that we're working on, including the avatar system, etc. Been preaching about it every single day, every single morning, every single evening and afternoon, and I can't be more ecstatic about that. With that, all that being said, I'm going to hand over the microphone, the trading floor, to SPDas. We can get started. SPDas, we are ready for you. The trading floor is yours.
Okay, thank you again. And I was just setting up the visualization of certain things that we did on the hourly chart. But that's okay. We are good to go now. Give me just 1 second and we will start off. Just one Fibonacci ratio I need to push out of the daily chart. Okay, fine. All right, thank you once again and welcome back to session 1 for the day, Tokyo Sydney overlap. We are on 24th of Jan 2025, and that's the last trading session for the week. We should be having in place potential tops and bottoms for us to pick up from the next week actually. So straight away, let's get started on the larger degree counts first, and then we'll move on to the shorter charts, time frames actually. And we've got waves 1, 2, 3, 4, and 5 in place. Just allow me to change the degree. So it is the grandfather, minor wave. Similarly, again, a minor wave corrective decline is also complete now. And we have already started pushing towards the main trend. I'll push the arrow a bit on the right hand side so we can see the price action already beginning to move or cut loose on the north side. There you go. Along with the Fibonacci 61.8% retracement, that's one of the most important places and price action has jumped off from. That's a 61.8% jump. Okay, sir. So if you look at the wave structure on the daily chart, it really has taken out the first resistance, which we were referring to yesterday as well. So that particular move uh, could be the first wave on the daily chart. Let me bring up the. We are talking about this particular move. We are already long aggressively with a stop around 1.01, and we are not pushing or we are not replacing the stop loss or pushing it higher right now. We'll wait for a corrective drop. This is the correct. We are waiting for a corrective decline. Now that corrective decline could come this week, or probably it's going to take some time and materialize sometime in the next week. So we'll have to wait for that corrective decline before the larger degree trend resumes on the higher side again. Now, the the structure on the longer time frame is as follows: five waves up, followed by three waves down, which is the third wave is also complete. Ideally, now we should be having another five wave up of the same magnitude on the previous five waves, correct? Now that's the scenario. Let's go back to the hourly chart and see what it looks like. The reason why we are not removing or we are not taking the stop loss from 1.01 and suggesting a higher safety place, because if the entire rally from 1.0177 towards 1.0455 or 59 is wave one, like if this is wave one, that's quite possible, could be the fifth wave here, then we are going to see a wave two decline lower, all right, somewhere around this price. And we don't want to be stopped out, or we don't want to get in trouble when the corrective wave is still underway. Just making it sure, I'm just trying to ensure that we are out when the correction is deeper than expected. We are away when the correction is deeper than expected, and that way we will still stay in the trade. And so you understand the reason why I'm not moving the stop loss right now is the same. Is That's the reason. One more thing, or one more structure is the head and shoulder structure. You see the left shoulder is coming around that range, all right? Uh, I mean, it's not necessary, but the right shoulder might actually come and test the backside of this trend line. So what I'm going to do right now is remove the recent Fibonacci, and what I'm doing is, okay, let's remove that arrow as well for now, and okay, let's get rid of this as well, and we'll structure it nicely again. Okay, let it up. Now it's nice and clean. Okay, let's do an alternate count here. Let's say that's the entire rally, and if there is a corrective decline of a larger degree, one larger degree in underway, then you see the 50% is around just below what we discussed yesterday. It's around 1.0316. So it's quite possible that we might have a decline towards the 300 level now instead of 340, 350. All right. So, but I'm not suggesting a change here. It's not too difficult or too far away from where the price action is expected to drop. Let me just let's do the arrow now, and that could be that could be the next projected wave theory. All right. So it's really the corrective waves sometimes always sometimes test our patience. Remember what happened between the 15th and the 20th of Jan. It took us, I think, at least 5 trading days or 6 calendar days to wait patiently for that breakout. And we've got that breakout. We've also got the particular test out there. We're just waiting for one more to come through, and then we are good to go on the north side. All right. So back to the retracement of the recent boundary. Let's work out. I mean, that is the range, 340 to 320. That should be the range now. All right. So for those, now we are discussing this because if you're currently joining the sessions, if you want to pick it up from the optimum level, that is, if you want to trade euro at an optimum level from what prices are looking at right now, then you must be looking at around 345, 350 or 320, 40 region to enter on the long side. Again, requesting the stop loss, please don't change it at this point in time. Let it be at 1.01. We will shift it as early as, I mean, maximum worst case scenario, we should be at a break even or locking profits around the first week of February because the larger degree trends and moves are beginning to turn higher for euro already on the daily charts. It's just a matter of time that it reflects on the hourly charts as well. All right. But we still need to have a decent corrective decline before things start looking further on the upside. The dollar index, I have not been able to change the structure. I mean, all these will appear on the daily chart, which will make it a bit uh, busy actually. So let's at this point in time, let's work out here itself. Again, the same old story. That particular arrow, it could be an A, B, and C wave is still left for the correction to complete. And the C wave could go towards 108, 60, 70 mark to terminate wave 2. Remember, we've got wave 1, wave 2, and one of three in place possibly. We are looking for the second of wave 2 or 3 to be in place around 108.77. So we might have to just wait for, remember Wednesday, I mean, yesterday. I think yesterday we were last Tokyo Sydney overlap, we were talking about we still have 3 sessions or 3 calendar days or trading days to go. That is Wednesday, Thursday, and Friday. And somehow it is going to take time or kill time until Friday or the early next week to reach another optimum level where we can enter shorts again. All right. So now we are the last trading day for the week. We still have the entire day to go. It's quite possible that it reaches today itself. And today being Friday, but it's not if there is a noise coming out uh, in terms of the trigger. When I say noise, it is a fundamental trigger for us. Like an inflation or some any other data or interest rate. It's not interest rate today, but I'm just giving an example. So it could be a fundamental trigger for us because news and events are just triggers for us. We don't rely on those things to place our trades. But what they do for us, the good thing that they do for us is they move prices to the level that the charts have defined. Right now, the level defined is 108.77, let's say, for example, and you have an event of fundamental data lined up, maybe the New York Live. That event could act as a price trigger for the bulls to carry through that range for us to re-enter on the short side. That's what I'm trying to say. Okay, we'll touch base on this when we begin the theory classes, but this is the analogy of what the events are like. Remember 20th of Jan, that event of inauguration, that was the day when we were expecting a breakdown lower, and that's what it happened. That's what happened. Okay, so it's all markets are the boss. They have already priced in most of the things. They just need the trigger to reach there, and that those trigger are the events. So coming back to the dollar index chart, look out for another short entry around 108.70, 60.70 region. Stop loss, please, around 110.30. Don't change it right now. We will do it next week and targeting around 105. Now, as I said yesterday, if you were there in the New York live, that price drop for gold, did I tell you that it's going to act as a trap for most short traders? You can go back and listen to the session and and see what the price action is doing right now. We are back towards 2756. So this is what the charts were telling us a story. I mean, I can zoom in a bit more. That particular wave four, see, there was just one wave difference. All right, see, one, there's a five wave decline and a corrective wave higher, and again a five wave decline. We were just this one wave away. It came through the New York live. It tested the 38.2%, completed the structure 535. That's a zigzag, and probably now on its way towards a new high. Now, when that decline was going on, I think we were sometimes around 39, 40 during the New York session. Most of the traders who were short or were actually holding short positions or wanting to add more, it was a trap because it begins to play psychological games on your mind when you stop thinking much about the waves and more about the trades. All right, this is the problem, and once we overcome this problem, no matter what happens on the trade arena, but we are very cautious on the no matter what happens on the price area, we are very cautious about the wave area. Believe it or not, what the waves are saying is what the charts are saying, and once again, they are always right. All right. So now the situation in gold is it has one more high left to touch towards that resistance around the 2785. And it's a big weight for us after getting tipped off around 55. It is still weight for us, but the aggressive short positions are on. They are still on. We are not ruling out those aggressive trades at all. So wait for that. Uh, we This is on, right? Aggressive 45, 46, which we have bought. So what we can do right now is stop was around 2716. This is a good idea. I'm going to write trades for all now so that we can discuss it later. Uh, just for the sake of not losing money, what we can do is we can move the stop loss from 2716, what we discussed earlier, to maybe what is the low there? It is around 36, right? So we put it just below that. Maybe we change it to 2730. You know what? Let's keep it at below 30 mark. That is 2726. Okay, so we've just reduced risk a bit. allowing a corrective decline to happen, and we are still on the track. So the aggressive long trades for gold is active now. We are pushing or expecting to push it higher towards 27.85, and then we'll take it from there. All right. For those who have not initiated aggressive longs and would want to trade the larger degree direction, still we are on the sidelines for the potential limit order to trigger around 85.90, right? And the larger degree structure is again, I'm bringing up on your screens. This is the larger degree structure. We are working on an A, B, and C decline. Not we are working, gold is actually working for a corrective decline towards that C point. But we still have one more wave to go before that happens. All right, sir. We'll touch base with the indices, but in the New York session. But just a quick view on the price action, and then we'll flip the chart quickly. So the right shoulder is still is being working upon, and I think the channel, it's not exactly tested, but you see, in the New York Open, we were talking about 44,500 kind of zone. Now we've at least reached there, all right. That 500 zone has been reached, and maybe it's time for that was an ABC channeling. Channel is slightly higher, so maybe some more pushes left. But you know what? You see that RSI with the new high, correct? Now there could be a decline and another high while the RSI drags behind. Let's have a quick look on the other side 4-hour chart as well. Same story, maybe a quick price retracement and a new high while the RSI drags lower. If that happens, then we are still on track for the right shoulder. All right. We'll come back on this during the NY session. For now, it is Bitcoin, the coins, and the coins are pulling back or retracing, and maybe we still have one wave to go. That's a retracement or corrective decline, or that's either wave two or wave E or the triangle. If the triangle was done incorrect, maybe we started from here, but the triangle could have started from there, this point. So that's A, B, C, D, E, or 1 and 2. In any case, our stop loss around 99 or possibly at a break even, and we are still good to be on the trade with an upside towards 110. That's still a cone shaped or yes, cone shaped contracting triangle structure still going on for Bitcoin, but the long trades are on with the stop around 99 and potential targets are here. Now look around this wave. That wave is just the last degree, last wave actually, fifth wave, and it shows around 120, 113 and 115. So keep in mind that we are just away, just one more high or possibly two more shallow highs away. Ethereum should be lagging behind. That's what it's picked up from where we left in the last session, but it's still lagging behind on covering that particular ground. I mean, this wave is quite. It needs quite a bit of push here. At least it looks like the triangle structure is complete. It's out of the triangle here. maybe one more decline, and then a push higher. So I think it should happen during the weekend actually, or maybe some triggers during the weekend because it doesn't have really much time to cover. One more week left. That brings us to the end of Jan series, and because most of the time I said that the end of a series or the beginning of the series, that's the overlap time when we mostly witness major tops and bottoms in place. To recollect the trade here, ideally we can we've moved our stop loss below 3100, that is 3000. Even if you place it around 29, that is fine. But if you reduce risk, it's even better. So let it be around 3000 and let it run through the 4200, 300 area. All right. I took the wrong one, but it's okay. So Solana is still under. I don't think it's out of the consolidation structure yet. We need to see a push through that particular height for a breakout kind of a scenario to happen. So triangle consolidations are what they are. I mean, we need to give them time for breaking out. For Solana, we already triggered, I think, around that price. So we are in now 241. See if you're there's not anything called you cannot book profits, right? If you entered around 239 something or 240 something, stop around 229. Keep booking small profits if you want. You can keep only hold a very small position. Just in case the reversal, there is a pullback, you can always get on the long side once again. All right. See, making money in a consolidation structure, most of the traders find it difficult because if they are inclined to hold longer, they might miss on the profit booking opportunities which are offered during the consolidation phase. But if your habit is to keep booking small profits, then the consolidation phase, until it is happening, we might get two, three chances of entering and taking profits, again re-entering and taking profits. We actually end up making more profits than a trend. You look at this price; it has almost given another chance coming to the 3.1 area. It went to 3.2 and it came back to 3.1. So this consolidation phase is still continuing. Buy right now, stop just below 2.8 and wait for a breakout around 3.2. If it doesn't come, you can book small profits around 3.216 and give ourselves a chance to buy again lower. All right. It may not come all the time, but there's nothing wrong in taking profits off the desk and then waiting partial profits of the desk and then waiting for one more opportunity for the market to provide us. All right. Okay, so I think we've touched base with most instruments that we normally do. And let's bring this session to a pause here. Once again, I thank you for tuning in. And I'll hand over to Igor now. Back to you, Igor. Thank you.
Thank you, SPDas. Always a pleasure.
Oh, thank you.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.